Please be seated. Good afternoon, Governor. Good afternoon, members of the NPC, heads of the Bank of Ghana, and members of the press. Welcome to the 123rd regular MPC press conference. And as you are very much aware, the MPC has been having meetings from Monday to Wednesday, and the decision day is today. We are also privileged to have members of the MPC with us, to you. And I will start with the external members. For the external members, we have Professor Joshua Abo, give us. For our internal, Noah Ahulu. Dr. Zachary Mumuni was the MPC member representing the treasury market of the bank. And now, and still MPC member. Ladies and gentlemen, you also know that this is the first MPC meeting for but MPC as the governor of the Central Bank of Ghana. At this point, I will invite, and also on the Bank of Ghana website. And thank you to all the media.
So, good afternoon, everyone. Some of the summaries. So, let me thank you for joining us for this press briefing following the conclusion of the week to assess recent economic developments and risks to the inflation outlook. As part of our continued commitment to transparency, provides an overview of the key discussions on recent macroeconomic developments and the decision taken by the committee. Now, let me first start with the global economic developments. The global economy was resilient through 2024, supported by the strong real income growth and a less restrictive monetary policy stance relative to 2023. In the first few months of 2025, trade frictions arising from an emerging tariff war, elevated global interest rates, and geopolitical tensions have heightened uncertainty about the global growth outlook. These uncertainties have weighed negatively on consumer and business confidence, softened investor sentiment, and increased downside risks to growth. On the back of persistence in services inflation, resurgence in goods inflation, and the recent tariff actions by the U.S. The imposition of additional tariffs by the U.S. and retaliatory responses have pushed up long-term inflation expectations in some emerging market economies. In addition, decline in crude oil prices be partly offset by the effect of the tariff increases. Against this backdrop, global inflation is expected to remain high in the near term. Global financial condition rates, rising long-term bond yields, declining capital flows to emerging markets and developing economies, and volatile equity markets. The Federal Reserve, Bank of Japan, and Bank of England all kept their policy rates unchanged in March 2025 on account of rising trade and economic growth in the euro area. Expectations of higher for longer policy rates and rising uncertainty kept long-term bond yields high, while equity markets remain cautious due to concerns about the effects of tariffs. On the domestic front, ladies and gentlemen, growth continued to rebound, exceeding initial expectations. Provisional data from the Ghana Statistical Service estimated real GDP growth
rate of 4% for 2024 and the 3.1% recorded in 2023. Non-oil GDP grew at 6.0% compared with 3.6% recorded in 2023. The growth outturn in 2024 was driven by activities in the industry and services, lower crop yield due to adverse weather conditions, among other factors. The bank's real sector indicators point to a sustained improvement in economic activity amid significantly improved business and consumer sentiments. The updated composite index of economic activity, or what we call the CIA, rose by 5.7% year-on-year in January 2025. This was driven by increased consumption, international trade activities, and private sector credit growth. The confidence surveys conducted in February 2025 also showed significant improvement in both consumer and business sentiments.
Both remain high in 2024 and sticky around 23%, significantly higher than expectation, marginally from 23.8% in December 2024 to 23.1% in February 2025. And this was due to easing but still high non-food inflation. Food inflation has remained elevated, on the other hand, on account of unfavorable climatic conditions and other constraints. The 2025 and inflation excluding energy and utility items from the consumer basket eased from 23.1% in December 2024 to 22.4% in February 2025, and compared with 24% in the same period last year. This notwithstanding, latest inflation expectations model, the yield curve, and surveys all point to softening expectations, although still above the medium-term target. On private sector credit growth, credit is beginning to show signs of recovery, and in February 2025, private sector credit recorded 2024. In real terms, credit growth was 3.1% compared with a decline of 14.7% performance at the end of February 2025 relative to 12.1% growth in the same period last year. With regulatory reliefs, the banking industry's capital adequacy ratio, or what we call CAR, was higher last year. Without reliefs, however, the capital adequacy ratio was 12.1% in 2025 from 24.6% in February 2024. Excluding the loans in the loss category, which are fully provisioned, the NPL ratio as at end February 2025 was 8.9%. Overall, the financial soundness indicators showed broad improvements in asset growth, solvency, liquidity, efficiency, and profitability. The 2024 fiscal deficit on commitment basis was 7.9% of GDP against a target of 3.8% of GDP. And this was on the back of higher expenditures than target. This notwithstanding, early indications from banking sector data suggest some improvements in fiscal performance in early 2025. These, along with the commitment to fiscal consolidation as was presented in the 2025 budget, should support the fiscal outlook going forward. Also, the ratio of public debt declined, supported by the debt restructuring. Now on 2025, for example, gold prices crossed the $3,000 per fine ounce on March 14, 2025, on account of heightened economic uncertainty triggered by the trade and geopolitical tensions, persistent inflation, and weakening US dollar. In February 2025, gold prices averaged $2,897.3 per fine ounce, indicating a year-on-year growth of 9.74% to settle at an average price of $74.95 per barrel. Cocoa prices, however, declined by 8.5%, driven by improving supply outlook for the current 2024-2025 season. The strong external sector performance in 2024 continued in early 2025 of international reserves. In the first 2 months of 2025, the trade accounts recorded a surplus due to higher export receipts relative to imports. Total exports posted 50% annual growth to reach 4.3 billion. Price and volume effects. In contrast, crude oil exports declined as output from the 3 oil-producing fields fell. Total imports increased by 7.3% year-on-year to $2.7 billion 2026. In other words, the level of international reserves as at now is equivalent to where it should be under the program in 2026. The stock of gross international reserves at the end of February 2025 was 9.4 billion, which was enough to cover 4.2 months of imports of goods and 2024 as defined under the IMF program, which excludes the encumbered assets as well as petroleum. $0.9 billion, equivalent to 3 months of imports of goods and services in February 2025. The foreign exchange market, ladies and gentlemen, has continued to witness stability in recent months, and this has been aided by improved liquidity from remittance inflows and the domestic gold purchase program. The stability sentiments. As of March 26, 2025, the Ghana cedi depreciated at a slower pace of 5.3% against the US dollar, compared to 7.6% in the same period of last year. In summary, ladies and gentlemen, the committee noted that the global environment has become more challenging, reflecting trade and economic policy uncertainty. The series of tariffs announced developments have already triggered downgrades in GDP growth forecast in the 2 largest economies, and that is talking about the US and China, and in turn, global growth. In addition, the disinflation process appears to have stalled in some countries, while financial conditions remain broadly restrictive as central banks slow the pace of monetary policy easing. The persistence of these external headwinds may spill over to the domestic economy through the trade and financial channels, highlighting the need for policy to remain proactive. On the domestic front, ladies and gentlemen, early indications point to improved growth prospects. The bank's CIEA rebounded and the Ghana Purchasing Managers Index moved above the 50 benchmark in February, implying increases in new orders by recovering. These developments suggest a positive outlook for the economy going forward. On the external exports, driven by sustained implementation of the Gold for Reserve program, continued growth in remittance inflows, and commitment to the implementation of policies and reforms under the IMF program. And the banking sector has also remained broadly stable. Credit risks within the banking sector, however, remain elevated, as underscored by increased non-performing loan ratios. The bank's latest macroprudential risk assessment indicates some moderation in systemic risk. The bank will have to continue to closely monitor undercapitalized banks to safeguard the stability. Fiscal stance was expansionary in 2024, and this has created significant fiscal impulses and a liquidity overhang that needs over into other segments of the economy and derail the disinflation path. While the government is required going forward. Now, while headline inflation has declined marginally, it remains a concern. Both food and non-food inflation are significantly above expectation factors. Preventing the second round effects from such increases will be essential. The persistent inflation dynamics will require a policy reset to re-anchor the disinflation process. Assistance, strong liquidity management, and commitment to the 2025 budget, which seeks to reset the fiscal consolidation process. The committee, by a majority decision, and I mentioned majority decision, for the first time we are using a majority decision unlike the unanimous. And so by a majority decision, the committee decided to raise the monetary policy rate by 100 basis points to 28%, and this is meant to re-anchor the disinflation process. As inflation becomes firmly anchored, and I want to emphasize that, as inflation becomes firmly anchored, as we see the next readings of inflation and we see declines, the committee will reassess the scope for a gradual easing in the policy stance. Now, let me say a few words on the additional operational measures. As usual, apart from the monetary policy decision itself, we often also announce a number of operational measures. Now, so in addition to the liquidity management and enhanced monetary policy transmission, and I want to give you three of those. First is we are introducing a longer dated 273-day instrument, which is meant to augment the existing sterilization toolkit. Secondly, we plan to intensify the monitoring of banks' net open positions to ensure compliance. And now all this is meant to ensure stability in the FX markets. Then the last one is to review the current structure of the cash reserve ratio. You know, there's the dynamic ratio, and there are also those high levels that have been maintained. And we want to assess its broader impact on liquidity conditions and financial intermediation in the economy. Thank you very much.
Thank you very much, Governor Dr. Johnson Esiama. Members of the media, as we do it always, We'll take the first round of questions. One question per media house, and keep it short. Mention your name and the media house that you represent. Please make sure you catch my eye before you start speaking. Yes. Yes. Yes, please go ahead.
The monetary policy rate by 100 basis points. I want to know how you're going to juggle the situation where you have the MPR at 28, but you have short-term treasury bill rates at below 20. I have the Ghana reference rate, which is the base rate for banks lending. Before today, it was at 27, which was the same as the monetary policy rate. So how are you going to juggle the situation with inflation? How are you going to maintain interest in investment in government treasury bills? And how are you going to try to spread the joy of falling interest rates with the case of short-term treasury bills to actual borrowers from the banks who are still borrowing at over 30% because the GRR is still at 27? Thank you.
Thank you, Toma. Yes, please go ahead.
My name is Jennifer Ambule with the Chronicle newspaper. Governor, please, during the National Economic Dialogue Forum, you indicated that the bank is considering using a portion of commercial banks' reserved to support agriculture, particularly through GESAL, to address food inflation. Now, given the potential risks of direct central bank involvement in sectoral credit allocation, would the bank rather consider strengthening GESAL through indirect, would the bank rather consider strengthening GESAL indirectly through liquidity? Additionally, how does the bank intend to balance this initiative with its core mandate of ensuring price stability, especially under the current IMF program? Thank you.
George.
Shall I use this one? No. My name is George Yafe from Joy FM. Doc, my question is, how did the recent development on the treasury bill market force the committee to go this direction, more of an aggressive approach, and then try to get a connection also? The fact that it was announced in the budget that we missed out on most of the program targets and the situation. You said that you monitor the space and come back. Are we going on that line again where there will be more pressure on the monetary managers to continue to hike the rates, looking at what is happening? Thank you.
Good afternoon. My name is Naja Gliago with GBC Radio. The governor mentioned that there are a number of undercapitalized banks and that they would have you identify them already, and how many are they? And if you can do us the honors by giving us one or two hints. Thank you.
Thank you, Governor. It's your time.
So maybe I can take the last one first, if it's okay. On the issue of undercapitalized banks, you know, the bank has been working on these for a while now. A couple of them have been under what we call the PCA. The head of banking supervision is here. He's available to give you further details on the specifics. Can you raise your hand so they see you? Okay, so that's the head of banking supervision. He can walk you into greater detail on those. Then there's a question on how did the recent development, that was Joy FM, the T-bill rate, how did it work out, right? Well, it is true that in terms of the program targets, quite a number of them have been missed. And therefore, we need to do some further work to ensure that the program remains on course. For us, one key variable is the inflation rate. And the rate where it is now as such by now. So you see how much we have to cover to be able to stay on course. The Monetary Policy Committee considered these, and in our view, also looking at the liquidity injection that occurred last year, we need to get busy with those. The next reading for inflation of policy. It is not the IMF at all that's putting pressure on us. There's the need to manage liquidity properly. There's the need to control the possible that inflation returns to target path within the period we envisage. So that underscores our decision. Then there was another one about GESAL. So I did not say that a bank session, and somebody was asking what we could do with those DMB reserves that are with us. And no idea that left to me alone, not based on what the institution thinks, left to me alone, if there's a guarantee fund to which we can come sense. But that is just assuming that a guarantee fund works perfectly well. So it was a hypothetical illustration that I gave. There was nothing definite that as a bank we were going to support GESAL. But that said, remember GESAL began from here. We began it somewhere 2014, 2015, until later on it got moved to under Ministry of Finance. That notwithstanding, we are still committed to its objectives. We think that that is one setup that we can transform to be able to support agriculture, at least indirectly. Then the next question was on the falling interest rates and on government instrument. So let me explain that we have the central bank monetary policy tools, and then we also have the government instruments. The objectives of the two are different. Whereas we seek to sterilize, we seek to manage liquidity conditions, right? Government seeks to finance, all right? They seek to do their financing, they seek to do the heavy lifting they have to do. And let me assure you that we are conscious of what is going on. The decline in yields on government instruments is welcome news. That in the liquidity conditions we have currently, if nothing is done, if we don't manage that liquidity condition properly, we might see inflation, going up even further, or there'll be a delay by way of the disinflation path, for which we have to, take these measures. And at the end of my presentation, I also mentioned that conditions to get onto an easing path. We'll continue monitoring it on a day-by-day basis. We implement these decisions through our financial markets department. And so, mind you, on a daily basis, we are looking at the impact of our policy. We are looking at how the objectives for which the policy decisions were made are being met. It's something we are going to continue reviewing until the next MPC date comes again. I believe I've covered all the 5, have I? Okay, so we can take the next 5.
Right, okay, so let's have the next round of questions. Yes, Asasi Radio, and then after Suleimana. Yes, in
Hello.
that order. And then Nat, Lord, sorry. So in that order, the next 4.
All right, thank you very much. My name is Nano Yankra. I work with Asasi Radio. Governor, last year the bank launched a gold coin in an attempt or as part of efforts to stabilize the cedi. I would like to know how that initiative is doing on the market in terms of value.
Yes. Are there plans to take? Sorry. So we've always missed the medium-term target. Are there plans to vary or relook or take a second look at the IT policy? Thank you.
Thank you very much, Governor. Please, my name is Lord Nate. I write for 3news.com. Governor, during the opening of this particular sitting on Monday, you mentioned that, and I would like to quote you. You said, meanwhile, our microfinance and rural banking sectors are showing early signs of stability, but recapitalization and regulatory framework reforms must continue to preserve confidence. On the back of this, I want to ask about the current status of the Societe Generale move. I remember that last year, your predecessor mentioned that the central bank had requested that Societe Generale finishes it with the list of persons seeking to acquire its shares. So I want an update on that one, Governor.
Norvan, please.
Okay, so my name is Norvan. I write for NorvanReport. Governor, I want to know, in which you actually mentioned in today's briefing that you gave us, what is happening with that area, and then also the banks that are showing signs of insolvency. What are the real issues underlining that, and how is the bank working with them to ensure they come back to stability and able to work so that we don't see another round of licenses being revoked?
Norvan, Mr. Governor. Okay, so you can add it. Yeah. Thank you.
Thank you very much. My name is Sam Doe, and I work for Tech Focus 24. My question is very simple. It's a direct one. America is doing what America is doing. Trump is increasing tariffs all over the place, and is doing what is good for America. What's our counter strategy? I heard the governor say we need to keep policy proactive. What does that mean? Thank you very much.
We have to do what's good for us as well. What is important is to reduce our risk exposure. But on the gold coin, yes, the gold coin was introduced sometime last year, I guess. And broadly, gold and gold-related, instruments have been doing pretty well. But yes, the gold coin, the rollout needs to be looked at again. My information is that we've been meeting with banks. We're trying to, put some life back into it again. And so very soon you'll see some action as far as the gold coin is concerned. It's a good instrument. It's a good, investment alternative. If you notice in this country, you can only do two things. You buy T-bills, three actually. You buy T-bills, you buy fixed deposits, you buy FX. Not so. But ideally, there should be gold coin. We are sure that that will become a good instrument of choice for Ghanaians very soon. Then the inflation targeting regime, we have spoken about that for long. So, first of all, inflation targeting doesn't mean that you don't pay attention to real sector variables. You do. If you look at the range of data we had to look through in the last 3 days, I tell people that the name inflation targeting is what the problem is. It gives the wrong impression. If you observe how it works, compared to what the regimes were before, previously we used to have the direct controls. Those of you who are old enough, then we moved on. You use all the data available to you. Ended the statement towards the last part. I made the point that condition on what goes on, the committee stands ready to reassess the situation. We are forward-looking in that regard. So the workhorse of inflation targeting is not a problem. The workhorse is fine. What has been the problem for us in this country is the shocks that have been confronting the economy, the administered prices, etc. Anytime those shocks hit the economy, it takes the inflation, path out of course. So when I came in, I proposed a number of things. And the aim is to improve on this workhorse of inflation targeting. I've outlined a number of ways. For example, the area of transparency, greater transparency, so you get to see what goes on. We have started work on that. By the next MPC date, you will see a number of reforms that we are implementing, just to allow you, to understand what is done. When we have to increase rates, you can appreciate why we had to increase rates. A number of other areas that we are going to be reforming, even the model itself. The issue of jobs came up during our deliberations. But so you see, you wouldn't know that we discussed jobs. We did. We discussed jobs. We've decided to actually look at the data that the Ghana Statistical Service is producing on a quarterly basis. There's some jobs data that GSS is producing now. We are going to be working with that, and I look forward to when we'll begin to tell you how much by way of jobs creation, what's going on in the economy. So the workhorse of inflation targeting is not the problem. The problem we have had is the macroeconomic shocks that have been confronting the economy. But that notwithstanding, we can, modernize the framework further. We can introduce some new variables. We can amend the forecasting model just so that we reduce the forecast errors and we work with it. And I'm sure it will deliver on inflation going forward. On the Societe Generale, well, you asked about MFIs. There has to be a cleanup of that sector. And we are engaging the Minister of Finance. We are having some talks with the minister. Yes, in Societe Generale, yes. It is ongoing. A number of prospective buyers have touched base with us. But as you know, we are central bank, regulators. Ours is to issue the aspects that we have to look at. We have to make sure that they meet the policy guidelines when it comes to mergers and acquisitions, and to make sure that transaction is concerned. We are waiting for the shareholders. We are waiting for the agreements that can be reached, and then we get the issue about NPLs across banks. Yes, it's a problem. It's a real problem. But remember the domestic debt exchange. You remember that exercise? That also contributed to the NPL problem. However, aside that, if you look at the local banks especially, they have a disproportionate impact of this NPL problem in local banks going forward. And it is something that we have plans to do aggressively. Whether we like it or not, local banks will continue to be with us. There's a role for them. They have a role, to play. What we need is to put in the framework so that we can reduce these challenges for them so that they can continue to thrive. I'm sure I have touched on all the questions. Yes, okay.
Norvan, if it's a follow-up question, can we do it in the next round of questioning, please? Governor, can you please relax a bit? Yes, so thank you, Dr. Governor. Let's have the next round of questioning, please. Yes.
Okay, my name is Emmanuel Bruce, Graphic Business. Governor, at the opening of the MPC meeting, you made a proposal to the other members that on the publishing of the votes to enhance transparency. I want to find out what was the decision on that, and if it was a yes, when are we likely to see the first publication?
The next question, please.
Yes.
Yes, please go ahead. Joshua, are you ready? Yeah.
So, good afternoon. My name is Joshua from the Business and Financial Times. So, Governor, on the back of the gold board, I'd want to understand what's the current stance of the bank with regards to the gold purchase program, and is there going to be?
Okay, let me give someone the opportunity as well. So please come on.
I've not spoken yet. Just know that.
All right. So yes, justice, please.
Dr. Governor, and some analysts have attributed our recent economic collapse of certain specific banks that were SME friendly. And so when you mentioned some challenges with some of our local banks again, should we be worried about these banks perhaps bringing a bigger impact or additional impact negatively on our SME sector again? Thank you.
Echo, you have the floor now.
All right, it's working now. Governor, just on the banks also, you spoke about trying to review the dynamic cash reserve ratio, but maybe tied to that would be the tiering of some of these banks, as against having a few banks that can take big ticket transactions. So I want to know what's your position on having more banks that are relatively smaller, or having a couple of big banks that can do big ticket things, especially because you are the regulator? And to what extent did AI inform this decision that you came up with? Thank you.
Right, Governor, I would like to take 2 more questions and make this the last round for the session. Thank you very much. So please, 2 more questions. The 2 of you there. Edu, and yes.
All right. My name is Adnan Adams Mohammed. I report for Economy Times newspaper. My first question is on the cocoa sector. I want to know what is the bank doing in terms of mobilizing resources like funds to purchase cocoa direct from the users, and then how is that also having an impact on the exchange rate currently? And the second is to know when the BOG will be publishing its accounts.
Right, Edu, you have the privilege and the honor to ask the last question for the first MPC press conference of Dr. Joseph Isiama. Thank you.
All right. My name is Edward Nyaku. I work for GTV. Governor E-Levy is likely to be kicked out. What would be the impact in bringing banking service inclusivity, making sure that banking services are more broadened and to reach out to a good number of people, because that is the drive behind these mobile phone business? How would this impact on driving financial inclusivity? Thank you.
Thank you very much, Dr. Governor. Thank you.
Thank you very much. Financial inclusion. Yes, it is welcome news. I believe that the minister has worked the math so that the removal of e-levy turns out on net terms to be a beneficial move. That said, anything that goes to innovation, it is welcome news. People are now asking for digital banking licenses. They're asking for standalone banks where it is not based on brick and mortar. All they have is an office somewhere, but then they are operating in the whole country. And when we complete work on the regulatory framework, in the future, we may see some of those emerging. So all those are based on innovation, banking on your mobile phones, etc. That is the next step in our development. So it is welcome news. We'll look forward to the impact, and we will take it from there. At the end of March, however, this time we might do it end of April. You are allowed to ask for a dispensation, so we are likely to do it at the end of April. I'm trying to figure out why you are interested. Anyway, so hopefully latest before end of April, you'll see our accounts. For 20. I know is that they've worked out an alternative way to raise money to finance cocoa purchases. So they've got some of their off-takers to be pre-financing these, and I think we've seen quite a significant level of inflows coming into the country for cocoa, for buying cocoa. And so we want to believe that Cocoa Board is on top of its job. The cocoa bills were introduced many years ago to help mobilize cedis for that purpose. Unfortunately, you know the story about the cocoa bills. My prayer is that going into the future, we are able to bring back life into instruments such as that again. Then the tiered banks question, it's one question that also keeps coming up. In other words, should we continue the universal banking regime? Should it be same banks, as we go on? The thinking is that there could be flexibility at some point, but no matter what it is, no matter how flexible you want to be, the bottom line is that any bank must be adequately capitalized. So whether it's a tier 1 or tier 2, remember, you must be adequately capitalized. Future, or in other words, to relax the universal banking so we can have some specialized ones. We can have that debate into the future. Where we are now currently is to make sure that all banks are adequately capitalized. All 23 banks are well capitalized, and that is our focus currently. Then the review of the dynamic CRR, I've already made that point. It is our intention to review that framework. It was introduced for a specific purpose. I'm not sure to what extent it has stimulated credit growth, but certainly what it has done is it's been able to mobilize a lot of liquidity, out of the system, which is not bad in itself. But going forward, considering the fact that it's a huge tax on financial intermediation, it makes sense to look at what you want to do to relax it. But relaxation to be taken just on the face of it. The point I made in the statement was that the committee thinks that we should look at the numbers properly. Already we have a lot of liquidity out there for which we have had to hiking again. So we decided to continue reviewing the regime, and I believe by the next MPC round, we'll see the picture clearer and we'll look at what to do. So the commitment is there. We are committed to look at the dynamic CRR regime, but certainly not starting from this MPC round. Now, the collapse of banks and the SME stories, etc. Well, talking about SMEs, it is true they are specialized, companies. And most of our companies in Ghana are SMEs. So therefore, it makes sense to ensure that SMEs, the financing needs for SMEs is always safeguarded. But that said, banks always have to be well, capitalized. Otherwise, their operations become unsustainable. I don't want to go into what happened in the past. That would be another debate altogether. But just to say that, yes, we are committed as regulators to ensure that banks remain resilient. And so once they are resilient, they can support SMEs going forward. My particular interest is in the local banks to see them strive. Currently, we have about 9 of them. A significant number of the 9 need, to some form of support. We need to encourage them to be able to compete with the foreign banks, and that is where our focus must be. Then the gold board, and then our gold purchase program and the likes. You heard about the gold for oil program, etc. The Ministry of Energy is currently conducting a review of the gold board framework. We are also involved in that review, and we want to look at what takeoffs we can take out of that. Now, we are hoping that the Gold Board, will take over these operations. And so the Bank of Ghana will be represented on the board of the Gold Board. We will be part of that exercise. And so we will still be ready. After the Ministry of Energy completes its audit and its review, we'll come out on the next steps as far as the Gold Board is concerned. Then the last one was on the publication of submissions. Yes, I mentioned it on Monday that we are moving to that regime. On Wednesday, you see it in the Daily Graphic as well as a few other newspapers. Now, it's not going to have the names of the members. You would only see the number. MPC member 1 said so and so and so. Because the main point is to try and understand the reasoning behind the decision, which is important. I mentioned that it was a majority decision. So that goes to suggest that it's not everybody, on the committee that said hike. There may be a few people that said something else, but at least you get to read their arguments and also read the arguments of the majority that went for a hike so as to understand whether the decision that was taken was in the best interest of Ghana. So we are happy to take these reforms on. You will see a few other reforms at the next MPC round. But that said, let me thank you for your questions. This has been my very first MPC. I have enjoyed it. Many of you know me already. I look forward to strengthen our monetary policy going forward. And the idea is to support government in achieving its aim. So I thank you very much. Thank you.
Thank you very much, Governor Dr. Johnson Esiama. I think we've all enjoyed you as well. And it's as if he's not been away at all. Present at this press briefing and the attendance of all of you. There is a post-MPC press briefing, as you very much know, and we will do that, advertise the date, and you have the opportunity to meet the other heads of department that will address most of the questions that you also do have. So the next MPC is